Raz, we're back.
Hey, we're back, and today I'm actually excited.
Yeah, this is gonna be fun.
It's gonna be fun.
And you
fun.
didn't wear your shirt. I'm disappointed.
You know what? I have it in my backpack. I didn't replace because I was so, I think, excited, so I didn't replace.
That's all right. I'll forgive you.
We can do it for the video afterwards.
Yeah. So let me set this one up. Jeremy Tan, Tinman Capital. Thank you for doing this.
Thank you for having me.
I'll just say a little funny bit about how this happened. I've been wanting to do this, and I think I was stalking you in your LinkedIn messages, not in a bad way, but just in a we got to talk.
You know why? Because you have very good nuggets.
Every
time you post something, I'm
always feel compelled, like, gotta say something.
Good,
yeah,
it's good. What are you gonna say next?
Yeah, and it's funny is I knew people that knew you, and I kept asking people for introductions, and I never got them. But then you eventually replied, got to is it your marketing person or your
John?
Yeah, John, and John's like, yes, let's do this. So thanks to John and you for doing this.
Thank you, John.
Yeah, we'll thank him with a beer too. So we'll just jump in because I think there's a lot to talk about. I'm not going to go through your whole dossier of who you are because people can go look that up. But investment banking, lots of different things. Now you're doing Tinman Capital, which is the only way I would have known about you. And I think, from my perspective, when you write, because you write a lot on LinkedIn and posts and stuff, you're always hitting my buttons, mostly in a good way. Because Raz and I kind of have this feeling about the ecosystem, and I'm opinionated. I'm not going to say I'm right, but I'm opinionated, and I think it's been heading the wrong way. I have my opinions as to when that happened. It's never been focused on B2B and sustainability and resiliency. So that when you write about that, it just gets me fired up.
And sometimes I'm challenging with the Israeli ecosystem where I'm coming from, which is a B2B centralized ecosystem. So it's always interesting to read what you are posting.
Good.
So we'll jump in because I was curious where the name come from for the firm.
Right. We get that question a lot. So when we started the firm 7 years ago, a few things that was quite important to us, right? I work for big companies, and part of the reason why we want to leave as well is because big companies, they're run in a very bureaucratic way. They think money is the only motivator and so on. And we want to do things differently, right? And we understood that for a firm to be built well, the people, every single person needs to buy into the mission, right? And we want to make Tinman, or whatever platform we're going to build, into one where people can be the best version of themselves, right? As we grow, of course, we started with two of us, and then as we grow, by definition, we are not going to be as close to the next hire, But so we wanted the name and the manifesto to actually embody our values and our strategy, so each one will carry that torch and move it forward, right? You know our strategy. So Tin is prevalent in Southeast Asia, right? So, that's one element of that. Second, you think about Tin Mai, think about men and women working inside there. So we think about Samsung women with the red hat. They built Singapore, they built Southeast Asia. And actually 60% of our workforce is female, right?
Nice.
Yeah. Not by design, but it just happened, right? Yeah. And you think about Tin Nor, I'm not sure you've seen, but I've seen Tin Nor. It's boring, it's dull. That's what we look for. We look for businesses that are undervalued. But when you polish it, it's got value. It becomes shiny. And the last part is important. The value is then shared. It's shared with the LPs, shared with the employees, as well as the founders. It represents our commitment to build a long-term business built on trust, and it's not a short-term gain. Right, so that's how the name came up.
Got it.
Yeah,
but there's a lot to it because it's like kind of setting some historical context to the region as well.
Correct.
Right? So
Correct.
I think that's pretty interesting.
I got a lot of flack from my wife though.
Because of men.
I'm thinking about this. Like women, I'm like, it's men, but it's men. It's Tin Man.
Yeah. So we call. 7 years ago, if you recall, that was around the time when the Me Too hashtag was taking out, right?
Yeah.
So it was which lady would join you, right? But we stuck with it. I think at the end of the day, it's your action speaks louder than the words. We affectionately call our female colleagues Tin Ladies, right? I think they're quite happy working there. You can speak to them. The only complaint is that the office only has one toilet now. They want two. So, but Yeah, that's how the name came about.
We should hook you up with Sal. We just interviewed Sal Shang yesterday, the CTO of GovTech. And it was really funny because he said that when they moved, it was when they were HP, right? And they moved into a new building. There was only like two, like one bathroom with multiple stalls and some urinals.
Maybe 3.
And everybody was complaining. And what he did is he wrote a program to simulate the male-female population and then the program said they'll be okay, and it turned out they're okay. And I'm like,
and he said because everyone was engineers, it resonated to them. Yeah. Okay, if it's okay, it's fine.
I'm like, only an engineer would look to solve the problem that way, right? So maybe Cao Sheng can check out the probability matrix for your bathroom.
I think its degrees of freedom is going to be quite limited though.
Love it.
Yeah. I want to go back to your experience and history, and you've been in Morgan Stanley twice.
Yeah.
Yeah. You first your career as an analyst.
Yeah.
And then you came back as a VP.
Yeah. Yeah.
Can you tell us more? How was the feeling, and why did you choose to go back?
So I pivoted. My undergrad was chemical engineering, right? And then I worked in Jurong Island here for an internship, and I would still remember the moment I was climbing the distillation column with my hard hat and shoes on, and I'm like, this is not for me. This is really not for me.
The wrong career.
Yeah, I picked the wrong career. Because I had an engineer walk me through and say, this is where someone died the other day because benzene, leaked out. Like, okay, well, this is not for me, right?
Yeah.
Anyway, I pivoted. So consulting, banking. I went to the consulting interview. I walked out. I'm like, this is not for me. I need to do something. Morgan Stanley took me in, very grateful, as a pivot from an engineer and knew nothing about
quite
finance.
the degree that they would normally pick up, right?
Correct.
Yeah.
So I did 2.5 years at Morgan Stanley investment banking, 2 years in Asia, and then they piped me to New York, which is a dream come true, right? But then I realized that banking was just not for me as well, because it was very transactional. You get a fee and you moved on, right? So that's why I left. Actually, also I got a job offer from a client of mine. I took the Chicago Mercantile Exchange public, and then the chairman, still the chairman now, Terry Duffy, hired me over. So it was almost like a push-pull, like there's a logical conclusion to my career, and then there's a client, okay, that's great, I want an IPO, why not go then and join them to help them grow as well, right? It then led me to then business school and so on, did private equity, then 2008, with about 10 years overseas, me and my wife, who is also Singaporean, want to come back home. So we made a decision that, look, with this context, it's time. I want to come back to Singapore, right? Career-wise, I should, after doing private equity in the US, go to Hong Kong. But I lived there before. It's great as a bachelor, not a great place to raise a family. Yeah.
No.
So you can say I prioritize, an element of family building over career. That's why I didn't go to Hong Kong. So I said Singapore is where I want to be. And I looked at I had a few job offers and so on. It wasn't, and Morgan Stanley was one of them, right? But it wasn't intentionally that I want to go back to Morgan Stanley and that it was so special and so on. But the role was different. I was looking at private equity jobs, and then there was this role, which is that I'll sit on the trading floor. I won't trade, but I will be running the principal investment desk. So I'll be doing private deals, sitting with the traders, right? Complete open concept. The traders will be yelling away at 4 p.m., trading the windows and so on. But what I saw in it was a few things. One, I saw commodities were going to take off. I saw an opportunity to understand the asset class, different asset class, trading as well as principal investing. And when I interviewed with them, I felt that these were no-nonsense people who they don't have patience for a 100-page memo. They just cut through the chase, and I felt like I could learn something from that. So that's why I took the opportunity. And also I knew it was very entrepreneurial. I could build something from scratch because they did not have the function, right? So that's why I ended up there and ended up in Morgan Stanley this time around. It wasn't so much like, I had a great time working there, but it wasn't that I have to go back to Morgan Stanley. Right? Yeah.
It met your expectations? Because
it did, actually. It did. And more, to be honest. I think during that time there, I made some great friends. Yeah. I learned a ton. I remember showing up with the first investment idea, preparing, a 50-page deck and so on.
Your idea.
Yeah.
Yeah.
And then the traders look at me and say, I don't have time to look at a 50-page memo. But that's what I'm used to at a private equity firm.
Yeah.
You're like, And I remember the head of the desk telling me, look, if you can't succinctly tell me what are the 3 risks and 3 pros, you don't understand this investment. And I'm like, okay, that makes a lot of sense, right? So it got me to retrain myself away from a private equity guy that, my spreadsheet is correct, I can project the revenue and the EBITDA 1 year out, when I knew in my 2 years there that each investment, there's no investment that we made that has met the projections, right? And this is very refreshing. It got me to think, look, let's be practical, let's be commercial, right? What are the 3 risks? You will never know what's going to happen, right? But what is the 3 risks, and can you mitigate them? What's the upside and what is the worst case downside and so on? All right, let's do the deal, right? And I think that made me a better investor, right? And they gave me a lot of room to run with it. So I really grew professionally in confidence because I was leading negotiations and so on, versus if I kept going in a private equity firm where I will rise from associate to VP to principal and so on, right? So in that regard, I really enjoyed my time there, and I did not have to work like a dog. So, in all the aspects, I really benefited from that. Yeah.
And during that era, because it sounds like you kind of relearned and getting these 2 balance of these things, you learned a lot. What have you carried with you from that era into running the firm? I
think the whole investment banking and this has got me to pay a lot of attention to details, which still carries over through now. Probably annoyingly so for the people who work for me now, right? And how to, I wouldn't say make nice looking slides, but how do you communicate a complex idea quickly, right? But also, importantly, how do you make decisions with incomplete information, right? And that's a lot of situation we find ourselves in, right? Especially in that role, because we don't pretend we know everything. Unlike in the private equity world, I felt that we try to fool ourselves we know everything. We hire expensive consultants to do all this deck, but actually in reality you don't. And how do you make information and live with that with incomplete information, right? So I think those 3 points kind of stuck with me and stayed with me in whatever I do these days. And finally, I think more of a management style. I benefited a lot by being given the room to grow. And I think that translates to how I manage our team now and the team before that. Just giving them the room, right? Because they will grow into it, especially if you hire ambitious people, right? Yeah. And it's just a joy to see them grow into it. I mean, not only do you benefit from it, but you can see their fulfillment. And I think that gives me and Muli a lot of happiness seeing that. Yeah,
that's cool.
I'm thinking, I'm just trying to convert the thing that you said. Do you agree that you said, okay, I'm willing now to take more risks because I'm more open to see things that I don't know that might gonna happen in the future?
Yeah, I think there's some element of that, but still the decision to leave my really high-paying job, and I wouldn't say cushy, it was not cushy job. It was a high-paying job where I was head of investment for Trafigura. To take the leap to start Tin Man, it still wasn't easy though, right? It wasn't easy because I had to overcome a lot of my relationship with risk, right? I think you've seen some of my writings. I've been very candid about it. I didn't grow up in a rich family. In fact, quite poor. And my dad had some financial issue where I'm still supporting them now. That leaves a scar and a relationship with money, right? And it took me a while to shake it off, right? And also, you having worked for big companies up till now, you get used to sort of a straight line, right? Nothing can really go wrong with your life, right? I mean, in the Singapore education system, you study hard, the equation is very clear. Study hard, you get good grades, you get somewhere, right? But that equation starts to fall apart when you become an entrepreneur, right? So I think, yes, it does help, but I had to do a lot of work on myself, even after I started Tin Man, to just be comfortable with the unknown, right? Yeah.
No more paycheck.
No, exactly. And no more paycheck.
That's hard, man.
Yeah, it is hard, but it's paid off.
So do you when you mentioned you went to school for chemical engineering, right? And then you've done private equity, done something, now you're in VC. You kind of hit our arc of generalism over specialist. Do you think about that much? Has that kind of been part of your plan, where you're, and I think running firms sometimes is a generalist kind of a thing. How do you think about in your life that dichotomy?
It's a very interesting question. I think first of all, definitely I tried very hard when I was young to plan my life, right? But after a while I realized that, you have to roll with the punches, right? Like this job offer from the CME and so on, you just have to roll with it. This job offer to go from Singapore, Morgan Stanley to New York just came, right? I think I started off more of a specialist, right? I mean, being someone as an analyst and so on, being focused on corporate finance and holding the art there, building spreadsheets, PowerPoint, so on and so forth. But as with my career choices with Morgan Stanley Commodities, I guess I took the first step towards broadening my horizon, right? And I saw the benefit in that because I think the world is getting interconnected increasingly, and understanding what happens in one asset class gives you an edge and understanding what's going to move the other asset class, like commodities prices. If you are investing in industrials and so on, you got to know that, right?
Yeah.
And then when you start your own firm, you definitely need to be a generalist, right? From managing people to fundraising, right?
Yeah, it's a whole different skill.
I never thought I could fundraise, but I raised 90% of Fund 1 and Fund 2, right? I wouldn't have been able to tell you that that's something, I never had the experience of selling and so on in my previous job. All I had to do was deploy money, right? So I think increasingly become more generalist, but also I find that to be really good at what you do, you kind of need to be not a broad, shallow T, but in the space that you operate in, broad but deep enough. So I'll give you an example. If I'm negotiating the term sheet and a documents with a founder, I think it's much better if you knew enough about the legal aspects to be able to say, okay, this you don't have to worry, or you can, you can on the spot pivot and say that, look, I can adjust the language this way and that way. Versus, hang on, let me call my lawyer, right? Because it's got to be at the moment when the negotiation is hot, if you're building the rapport and you can trade, right? You can't do that if you are completely, oblivious, not oblivious, it's a right word, but unaware of
or leaving it to somebody else
correct.
To understand it.
Correct. And you lose that touch. Versus like you go into a meeting, sending a signal to the founder that I'm the decision maker here. You can talk to me, right? And giving the confidence and what's said. So to do that, you need to be broad but deep enough, right? So hopefully that makes sense.
It comes out a lot. There's a book that when they talk about this, the guy kind of draws a line that generalism is this arc, and what you'll see is these deep dives along it to cover off something that when you do know it well, it supports your broad spectrum, right? But it doesn't mean everything does it like that. Yeah. And I think that's what you're describing.
Yeah, for me, it's even like kind of a eagle eye flying. Sometimes you just need to know, I want to say predator, but in that case,
you sense it.
Yeah, you sense it. Yeah. Where you need to go deep and understand better in order to have what you just said, the transactional, to be on the spot, to be on the right time, to do the right deal. So you need to be spot on.
Correct.
And then go back.
Correct.
And see, from above.
Correct. Exactly right. Yeah. And I think the transition of being able to focus on the details and yet go back and see the forest, that transition was very hard for me, probably 3-4 years out of business school, right? But once you do that, then you can do this zoom in, zoom out, right?
Yeah.
And I think it boils down, are you willing to dive into the weeds, right? Because sometimes it's a bit painful. But
I think also when I look at the portfolio, there are different type of companies, and sometimes they want to consult with you. So how tough it is not to know exactly the field and also be kind of supportive to them. How do you deal with that?
Yeah, very good question. Okay, the way we work in the firm, it's not your deal, my deal. It's everyone gets the same carry from the same common fund.
Hmm.
Every month, we will come together, or I should say that Muli and I split the portfolio up. Whoever did the deal, and the founder has a better relationship with the person, you become the chaperone for the firm. Doesn't mean that person cannot call me or vice versa, but it's just a chaperone, right? So every month, each chaperone will go through the company with their associates, with the other partners. We understand what's going on. So we're always apprised of the numbers and developments and people issues and so on and so forth, right? So I think that helps. And I think we try to do more listening than telling with the portfolio companies. They're going to know more than us, right? But you got to do the work. Like it's simple things like I just came from a board meeting. You got to read the deck. You have to read the deck. Right?
Please do your homework.
Yeah, do your homework. If not, it's a waste of time for everyone. So through all these simple actions, you know enough, right? But you also need to know, hey, look, I don't know, okay? But if you give me some time, I'll go figure it out where we can have a chat about it, right? So this is how we manage. And also our portfolio is not very large, as you know. And it's intentionally so that actually we have the bandwidth to remember and to be able to offer any value to the founders.
It's actually a good segue to the founders, because being a startup, you're thinking also of your founders. They need to create their own family. They need to think about their home. They need to think about the business. How do you try to assist them to think, how kids can come together with a startup, or how do you advise them, to do this? I don't want to say balancing, but
there's no balance.
It's no balance.
There's no balance.
I always someone asks me, how's the balance? There is no balance.
There's no balance.
It's a flywheel.
It's a flywheel.
There's no balance here. I mean, you're absolutely right. So I'm glad we agree on that. I think the question we asked the founders, or I asked the founders, number one, do you want kids? Some people don't, right? And then the answer is yes. I say, what kind of relationship you want to have your kids with your kids? Are you on the extreme, like, okay, it's born, I make sure it's healthy, I pay for that, and then but otherwise, just don't bother me. We'll go on family holidays together, and that's it, right? Or, a more involved parent, right? I can ask that because I went through the transition myself, right? I was operating on the left, and my wife was like, you gotta wake up your ideas. So I rotated there, right? So I think most people will choose the latter or in between, right? But the challenge is that sitting there young, are you able to think forward and say, this is the life I want? Try to combat that tunnel vision that I gotta build wealth, I gotta build this company. So that's a challenge that I generally see with founders in terms of helping them understand what you really want, right? Some of them see it immediately, some of them don't, right? But then I'll talk them through it. I say, look, if you want kids and you want the kind of relationship, start now. Don't wait, right? Don't wait, just start. Because you want to have the energy to be able to run on your kids and enjoy your kids, when they get older and when you get older. I say, take it from me. I wished I had kids earlier, but I did not. I was prioritizing career, right? And the fact is that the notion that you have to hustle and constantly be on your startup, I don't buy into that. You need to take breaks. The best idea comes when you're, I don't know, driving a car.
Running.
Yeah.
Running.
For me, it's running.
Yeah, same
Running.
here.
Yeah.
Or you are taking a shower. Yeah. You are taking absolutely something different.
It's never when I'm asking myself to do the idea.
I can admit sometimes on vacations.
Yeah,
on vacations. One of my good, best, ideas came on vacation because I wasn't in my zone, in my location, in my region. I was in different place, see different things, meet different people. So
correct. Or you just had a good nap or something.
Afternoon.
That happens to me all the time, right? So I say, look, the fact that you have a young kid taking 2 hours off for a meal, okay, at night, every night, or 1.5 hours, it's not going to make or break your startup, okay? And actually, it will be good for you because of what we just discussed, right? And you can be there as a parent, And I genuinely believe being a parent make you a better human being, right? I benefited from that. I found professionally I've improved because I don't sweat about the small things, right? And we talked about my uncomfortable relationship with risk. And also I realized that I handle founders better. Why? Have you tried telling your kid what to do? Listen.
Good luck.
Try doing that to a founder.
Yeah, and I have
Same
3
thing.
and he have 3, so we know what you are.
And with founders, I realized, I'll seed the idea, and 3 months later, they won't pay attention to it. 3 months later, they come up with the same idea without giving me any acknowledgement, and they go do it. I said, fine, no problem.
You nailed it.
Exactly. And sometimes they run and you're going into a brick wall, and you know it, right? Just like your kid. But you just have to, I'm not being condescending, but be that supporter, be that hand, and not say, I told you so. Right?
Yeah.
So I think similarly with founders, I think they can be a better manager, better human being, better.
Yeah, and I would add, because I was advising somebody in one of my angel investors who was figured like they were going to start having kids, and they'd asked me about it. And I said, the one thing you may not realize is it'll force you to get better at running your business, because you're going to have this time out that'll be unexpected, and you'll realize you either don't have good processes in place, you don't have good decision matrices, you didn't hire leaders who make decisions. So I said, if anything, it's going to force you, even when you take that paternity or maternity time, to realize, I've had people that come back from that and rejigger everything because they realize, wow, it should have been more autonomous. Because as a founder, you and I both, you can't be in everything. And I think you can, but at some point you're hiring people, the sales guys need to do things right. And if they can't learn to do that because you've been helicopter parenting them, you're going to realize that you won't have time to do that anymore.
Correct. I mean, the analogy I draw for them is that when you're a seed company, you're rolling a small boat. In Singapore speak, I call sampan, right? So you and your co-founder can dictate much of the success of that small boat. When you're scaling, you have a yacht or a boat. It's going to take a while to change it, the momentum. So without the system in place, you're going to fail, right? So I totally agree.
And sometimes people don't see it until the system is tested, right?
And then finally, financially, babies don't cost much, right? I mean, they touch wood as long as they're healthy, right? And if your startup fails and so on, and there's still time for you to get back and do something else and provide a future for your kids and so on, right? So that's kind of how I think about it.
Yeah, and if you're going to do it, just
early.
Get moving.
Take the pain.
Get moving.
And by the way, people think that I'll be as fertile as ever, right? When I was ready to have kids, it took us a while, right?
It's never immediate. It's not always immediate.
You read about this teenage pregnancy and so there's no happening to me now. So anyway, we digress.
It's not as magical as I have friends struggling to have kids, and and some of them talk about wish they had tried it earlier. We're gonna switch gears because there's a lot to talk with your history, and it's fun. And thank you for being candid about real life and family, because a lot of times people are not talking about that in my world. We want to kind of shift into the ecosystem and the firm and things like that. And all of this is in the spirit, the way Raz and I like to think of it is like, we're all trying to make this place or leave this place better than when it was when we show up. That's my thing here.
Good.
And that does mean talking about the good and the bad, right? Yeah. So we'll start with something near and dear to our hearts, and it's even on your corporate webpage. Founded in 2018 with a view that the B2B sector in Southeast Asia was underserved and lacked the scale of backing the B2C startups we're enjoying. Firm believers, I would say there's a report card now for everybody to not argue with this, if you ask me. Now, I'm not going to name names, but go look at stock prices, go look at things going private, public. If it's not obvious at this point, I rest my case. Right? So let's just leave it at that. This is, whenever you wrote this, either when you found it or later, we're talking many years have passed. How do you feel about it now?
So I think there's been some progress, and I'll go through the reason why. But I'll also say that, there's still a lot to do. Okay? And I say that even adjusting for my impatient personality, right? I still think there's a lot to do. I think if you speak to some of the universities accelerators now, it's their feedback to us. We didn't ask them. They told us 90% of the new startups are B2B.
Got it.
Yeah, and that's very, very heartening.
Yeah,
right?
like the funnel's changing.
It's funnel changing, right? Like to think that, the writings and so on that we embarked have helped shape a little bit of that. But I still think that the debacle over the last few years have shown, the failings in a growth at all cost model, and that perhaps the consumer market is not as ready to be monetized as we think, right? So that's one aspect. We have seen more capital be interested in B2B. And that has come more so from growth capital who have approached us and said, hey, can we look at some of your portfolio companies, right? So that's good and heartening.
Yep.
And we're doing rounds now, investing and so on. We can find more co-investors who doesn't quite need that hand-holding to get them over the line to understand, right? So I think those are elements of the ecosystem gravitating towards B2B. Having said that, like I said, I think there's more to be done.
Yeah. Got it. So the green shoots.
Yeah, green shoots. Yeah, correct.
Got it.
I want to be more specific on that topic. Maybe double click on that. When I came to Singapore 2023, so it's not that long time ago.
Oh, that recent?
Yeah,
okay.
Less than 2 years.
Yeah.
The conversation was B2C, 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 B2C. This is like the models. When you say we are now less holding their hands, do you mean they know to look at the models of how B2B working, to do the better understanding of how the metrics is, how the money goes, how the scale? This is what you mean when you say?
I think, okay, let's peel the layers, right?
Yeah.
I think the Gen 1 VC funds here are very B2C focused. Yeah.
Yeah.
Okay. And I still think they are. Okay. I suspect they're trying to do more B2B, but I've not seen that many deals. But it could be a result of the fact that deal flow volume has just been low, right? Okay. When I say there's more interest, we're talking about being able to find CVCs who wouldn't lead, co-investors, LPs who who were talking to us about Fund 2, generally more open and actually passionate about B2B, right? There's a very stark difference from 7 years ago when we started pitching B2B and people are like, what?
Yeah, what are you doing?
What are you doing? Trying to explain to them what a company does. It's not exactly a great conversational opener, right? Versus like, I invested in Gojek or Grab, something that people, shiny, people can relate with, right? It's a unicorn.
Everybody uses it.
Everybody uses it, right? So does that help you understand? Like the conversation has shifted, right?
Yeah.
And we get a lot more LPs who are locally who are like, okay, B2B, I get it. And I don't have to explain recurring contract, gross margins and so on.
Traction, how the traction is going to look like.
Yeah, correct. Exactly right. And the capital efficiency. So I almost get skipped the front part where quite often we get stuck. And then people are like, okay, let's get to the meat of it, right? Yeah.
We try not to be too topical or date oriented here because we think our content's kind of evergreen because people are learning from it. But I think, unfortunately, what's going to happen in talking to you is almost getting really current. and the reason being is you have written a couple posts where you've been very clear, like this should happen and this should happen and this should happen. And some of those are, and let me finish before you try to start. Pathways to exit, facilitate access to talent, both local and abroad, pre-approvals for government projects, a bunch of things. You had like 5. And then now though, we've had our new budget drop in Singapore, which has attacked some of this. So I think in the essence of it, maybe answering some of these, let's juxtapose it with, which I'm sure you're very aware of what's in the new budget and how you think, these things that you've been talking about are now almost getting tackled in little bits and pieces from a government perspective.
Okay. We always knew exit via IPO was an issue when we started the firm, right? And that's how the part of the strategy was framed. I want to exit in 50, 200 million, where a corporate or a PE fund has a balance sheet to buy us over, right? Just primarily because there's no liquidity in IPOs here, right? Let's park that aside for 1 second. We are seeing more and more corporates from Korea, Japan, China, who are interested in tapping into growth here. It makes sense because they are trying to diversify away from their home market. We've said that, even in our first IM when we raised Fund 1, the only difference is this now. It's become increasingly clear that Southeast Asia is one of the few bright sparks of growth, and also remains to be a neutral region despite the tension between US and China, right? As a result, now there's a bit of I won't say FOMO, a rush towards the calculus, because you have two choices. You build from scratch or you buy. They tried to build, but a lot of them have failed because they used the same mindset they had, which had success in their home market, which is a homogeneous market. It's not homogeneous market. Yep. Yeah. So they burned. Now it's like, look, I want to tap into the growth. So the calculus moved towards, let's buy. So we're seeing that, which is good, okay? But more can happen here. I'm trying to bring together with the budget here now. I think the reason why the US is such a great exit market, besides the IPO, is this great M&A culture over there. Yeah. The corporates are like, look, they don't have the mindset of businessmen here and women. I'll build myself. Yeah. I'll build myself. Why waste money buying someone and let them have their success, and we'll build ourselves, right? Yeah. And I think that thinking has to change. I don't know what policies can make them change, but I think certainly time and failure will get them to change. I'll give you an example, because we had one portfolio company in Fund 1 work with a client that I introduced. I won't name names, okay? And then after a lot of ding dong, they say, okay, we will build ourselves. I'm like, oh my God. And it's a bit embarrassing for me, right? It's my relationship and so on. A year later, they came back and said, we'll buy from you. Because they realized that they couldn't build, right? So I think a lot.
But they lost all that time, right? Because I'm sure they tried and wasted money and didn't get anywhere.
Correct.
All over what? Ego is the way I think about it?
Egos, maybe thiefdoms that's set up, right? Maybe the IT department has this not built here syndrome, right? Whatever it is, right?
And I think America would just say, I want or need this result now. And wow, yes, checkbook, let's go.
Correct, because I then have this synergies and so on, right?
But not always.
Not always.
Always. I've been PayPal a few years, and to build or buy was always a question. Not just because of the resources, time to market. Is about processes, policies, privacies. Integration.
Yeah.
This was the major challenge that we deal with, either buy or build.
No, totally agree. But my point is that they don't even think about buying here. They're just like, I don't want to buy, I'll build myself, right? Yeah. So I think the mindset will change. I think it's changing, and I think they will help with the exit markets here, right? Because there's some big corporates here, very large corporates here, who can certainly buy and have bought before, mixed results, right? But they have bought before. And then you have also PE funds have raised a lot of money, right? And they're trying to replicate whatever their peers have made a lot of money in the US buying B2B companies. The reason why it hasn't happened much because the pipeline of B2B companies just hasn't been that, the top of the funnel just wasn't that broad. Yeah. So I think we're seeing that. I think it'll take many years it won't be an immediate fix with SGX, right? I welcome, I think, the effort, the recognition there is a problem,
Which is a big step, right?
It's a big step.
Yeah. It's been like quietly known for so long.
So
right?
long, and people haven't done so. I'm glad they announced a sizable injection, but I think we still need to see the details behind that, right? I would exchange before. To create liquidity, it's not a simple solution, right?
Or overnight.
Overnight,
Yeah.
correct. And I still think, as I wrote in my post, don't focus on attracting the unicorns to list here, because Southeast Asia has the economy to produce companies in the 50 to 200 million for now.
Yeah.
Okay, and you'll be here to stay.
Yeah.
Okay, so don't have your incentive be geared towards big companies and neglect this folks here.
And should that size of company be allowed to list? Is that what you're saying? Or just make sure that that's a successful ecosystem, that size of company?
I think why not?
Yeah.
Why not?
I think they should.
They should,
It'd be the best way to manage professional liquidity is the way I think about it.
Because the way I think about it is that how many of these large companies can you... We know it's very hard to build a unicorn in Southeast Asia.
Very hard.
So why go to the bankrupt strategy of throwing money at that? Or the only other way is that I will attract an overseas company to come here, right? Which is fine, no problem. But once the incentive dies, they may leave.
Yeah.
But you should build and groom your own ecosystem who are here to stay, including your own managers who are here to stay, right? Now, definitely work with global funds, work with global companies, but don't neglect nursing your next pipeline of local folks who will be here to stay, and you're going to buffer that impact of when US crashes, the money pools, right?
Yeah.
And we're seeing that all the time. Asian crisis, it's all of that. So why we now have the balance sheet to be able to build a stronger Southeast Asia, which, by the way, will be good for the world, right?
Yeah.
So,
Everybody wins.
So on the exit side, that's kind of my view on it. But it's a good step. Let's see the details.
Yeah,
right?
fair. Yeah.
And that, I want to imagine together with you, tomorrow morning, or maybe in a month from now, someone is listening to this podcast. I hope more than one.
Maybe more
person.
than two people.
Yeah, maybe more than two. And say, I want Jeremy Tan to come to the flag. I want him to be in charge of the Singapore government startup ecosystem. What gonna be the first thing instantly you're gonna change?
We gave you a lot of power there with that statement.
Had to.
It's a tough question because there's so much to do. So much to do, right? And
you don't have to be Trump, yeah? Signing 200.
signing Go passports, yeah. I think if I were to vote, I will vote for, if I'm placed in charge, to seed the next capital stack here through seeding managers with the right strategies here. And why do I say that? I think part of the reason why we are today is a lot of money was pumped into the ecosystem, but by managers utilizing the wrong strategy. I think you guys can argue with that, right?
Yeah.
This power law doesn't work here, my view, at this stage.
Even if it might someday, to date it has not worked.
Yeah, correct. Because of the nature of it. I think we need to have the audacity and the bravery to say, look, this doesn't work for us. Let's do something that works for us, right? So seeding the next group of managers with the right fund size, right strategy that's suited for this region.
Which is kind of back, correct me if I'm wrong, to what they did a decade ago.
Correct.
With seeding early stage funds, some of the which, the Gen 1 funds, and it was the right thing to do.
Correct.
And what you're kind of hypothesizing is, let's almost do that again, but with the right incentives in place to drive it where we need to go, rather than just run.
Correct. Now, learning what we learn and know, right? You can seed the right manager. You can put, look, I need you to cap your fund size at 50 million or 60 million, right? Because we've done the math for the fund economics. You realize that 100 million fund, it's super hard to return, right? Yeah. Stuff like that you put in place, and obviously manager selection and so on. Why did I say that? Is because you pick the right managers. At 50, 60 million, there's not a lot of fees, a lot incentive for them to go out there and raise more capital from outside the region. And there'll be a multiplier effect, because if you say, the Singapore government backed me, the conversation opens a lot of doors in the US. You have to bring capital, not just your own, from overseas to here, right? So that's one element. So it's a multiplier. Second, if you pick the right managers, these are managers out there who are an extension of the government doing good stuff and trying to grow the ecosystem, right? Either by teaching founders how to scale, to spending time with founders, to backing great founders and so on. So it's also a multiplier effect from a knowledge, skill standpoint. Yep. I find that is probably the most effective for those reasons, compared to, okay, let's fix SGX now and all the, or perhaps help founders find go-to-market path and so on, right? Those are incentives, those are moves and initiatives that will be useful, but you have a multiplier effect here, right? Yeah. So that's where I will focus on. Yeah,
I agree with that.
And I'm thinking, I'm bringing my things from Israel and things that I don't see over here, and maybe you're gonna agree with me, maybe you're not, which is fine. I'm saying these managers, would you go with the direction of let's be agnostic, or let's be specialized on domain, meaning fund for cyber, fund for AI, fund for, because what I observe while I'm here, it's too many agnostic, not specific.
That's a very, very good question. So I think maybe different gloves for different stages. Perhaps at an early stage where it's an accelerator and or seed fund, you have to be agnostic to drive the funnel, maybe, okay? And then there's definitely room for specialists, because, I mean, I'm tooting my own horn, right? B2B tech, I mean, because we find that you understand it, you are able to help the founders, but you can make better investment decision, okay? But at the same time, particularly at earlier stages of the ecosystem, the deal flow may not support, like, okay, B2B, cyber only, and based out of Singapore, right? I mean, I'm making it up, right? You get my point. That I think it's a mix. I think there's definitely merits to someone being specialized and the right to drive results quickly, but at the same time, there's got to be enough deal flow for that region to warrant that, right? And then at the earlier stage, you still want to drive a good amount of founders and not pigeonhole them, so that they come through. So I think it's a bit of both.
Okay.
So before we do our closers, I think it's important to leave this chapter about the ecosystem on a positive note. What do you feel excited or good about sitting in February about this year and what you're doing?
It's a very appropriate question, because I was sitting there in December. I'm like, oh my God, really?
No one felt good. Yeah.
Really, it's almost that feeling, right? When in 2022, where everyone was already, at the beginning of 2022, people were like, you know what, COVID's going to be over. COVID's going to be over, right? Actually, not really. It's only in 2023 that it started picking up. I think it's somewhat of a similar feeling, at least for myself, in sitting in 2024, thinking like, you know what, this year you'll pick up, right? But it didn't, okay? I think I'm positive for a few things, right? One, I'm really excited seeing in our pipeline, we're going to close another deal in March. I'm really excited about the businesses we're seeing, right? And also the founders that we are seeing and the excitement that they share about, let's do something here, let's build something meaningful. And it's infectious, right? It reminds me why I'm doing this. So I'm really excited. Part of the reason why we're doing this, like yourself, want to build an ecosystem that everyone's proud of and everyone will stand to benefit. And you can't do it without good founders. Right?
Yeah.
You're standing on, VCs are standing on the shoulders of founders. Let's never forget that, right? I think despite all these challenges, a few things. One is the Singapore government has been a steady hand in Singapore, this region, continue to support the ecosystem through the co-investment programs and so on and so forth. And a lot of these initiatives that we talk about, at least the recognition is, something needs to be done. And I'm also excited the fact that given how nascent this ecosystem is in all aspects, including the capital stack, right? Advances in technology, including AI, is making it much more possible to build and stay lean.
Yes.
I think this is good for the region because we don't have the capital stack to support that. So all of that gives me hope and excitement that, look, and the fact that, look, Rome wasn't built overnight, right? We could have knocks. I guess I'm positive because I think overall people will take lessons from it and not waste this. Yeah.
Yeah, that's good. Yeah.
Yeah.
It's a good bookend.
It's good. I like it. It's giving me like a good atmosphere and inspiration for the
Yep.
future.
He's working on his startup. Yeah. Go Raz.
Yeah. Didn't go public yet.
No.
So let's do our closures.
Yes.
Let's imagine you go into your 20 years old. What you would tell him that you know now?
I'll tell him to calm down.
Calm down, have kids earlier. Yeah.
Definitely have kids earlier, for sure. Calm down, because I was so, I would say, unsettled, ambitious. Still ambitious now, but so much energy that I didn't know how to express. I was anxious because I guess a reason I was, ambitious without means. And I'm like, how can I catch up with my peers and so on, right? So as a result, it becomes a bit of a nervous energy and the fear of failure and so on. So I'll tell him to calm down and that everything will be fine, right? It has worked out, and I think relative to where I came from, I've done well and just keep going, right? It's a different journey. So I think if I told that, I think I would have a lot more fun, I think my friends will have a lot more fun with me. So
Enjoy the journey.
enjoy the journey,
Yeah,
exactly.
yeah.
That's something that people keep telling me, but I've never quite understood.
It doesn't hit until you're older.
Yeah,
Where you realize
correct.
When you say older, which age?
me, it's when the third kid, to be honest with you, because it was the last by design, that I started just realizing that, like, when I had the 4-year-old before, like, she's going to be 5, I have another one, I'll get to do that 4-year-old thing again. Because it's fun, right? And then now every month with her is like, that month's never coming back.
Correct.
And her psyche and her demeanor will never be the same. And they're very fun when they're young, as you know, that I'm like, gosh, just slow down. Like, if she wants to stay another 20 minutes at the park, stay the 20
so be
minutes.
it.
And I've even, I missed the meaning of what we're doing with my kid at the park. Because it's like, that 20 minutes is where normally you're going, we're all do this, set the timer. I'm sure you do it with your kids. Let's go.
5 minutes
10
warning.
more minutes.
8 p.m. man, it's the time.
10 years from now, those are the best 20 extra minutes you might ever have. You just
Correct.
don't know it while you're in the middle of it.
Correct.
Right.
That's why I say the hard part is getting founders to see. I wish I have a time machine to teleport them
Yeah.
so they can see it and then bring their perspective
Yeah.
to now.
Yeah.
So, I guess that's life, right?
Yeah.
So
And that's what I said. None of us in our 20s or 30s, unless you're really special, figured this out.
Yeah,
right?
yeah,
Like,
correct.
It's unfortunate. Like, yeah.
Good
All right.
point.
So, what do you do for your health and wellness? You're a busy person, but I'm sure you care about longevity and staying in the race. So, how do you kind of manage that?
I'm actually quite good at that, to be honest. I give myself credit. I exercise every day, right?
Awesome.
I run. If not, I'll do something in my upper body. my go-to is football, soccer, right? Despite 3 knee injuries and wives complain, I'm still playing, right? I wake up in the morning, I will journal my thoughts, and I do it twice a day, a gratitude journal in the morning and before I go to bed, just to remind myself, like, no matter how shitty the day when there are some bright sparks, right? So those are things that I do, right? Food-wise, we don't eat much processed food. I practically don't take any sugar, right? And the only vice I have, is drinking. So I like a glass of wine every night when it calms me down. So,
I'm in that camp.
Hey, we are human. We're human. We're not robots.
No, we're not.
Not
That's
yet.
my last vice.
That's probably why I run, because I like to, keep my calorie book flat. So
Same here. I'm doing the same. Any good book that you had a chance to read, or a show that you saw, something to share?
Show probably not, because I don't think the audience wants to hear that I just watched Squid Game Part 2.
It's good though.
It's good.
I won't lie. It was
Okay,
good.
I will check it out.
Yeah.
I'm watching Zero Day.
I haven't watched it yet.
Yeah.
My wife and I spend a lot of time reading books about mindfulness, right? So recently, I've just picked up a book from this Vietnamese monk, Thich Nhat Hanh, right? He's passed away now, right? I mean, his book he's got several books, Peace on Every Step. I find it very helpful because it's very simple paragraphs that's very relatable, right? And he's very practical. He said, look, don't spend hours meditating. It doesn't help if you don't deal with the problem you have. You can spend hours doing that in the cave. And I always find that his book gives me a lot of perspective when I deal with frustration at work, with my kid, with myself. And it always grounds me, right? And it's a simple read. I find that I get a lot more out of it.
What's the name again?
His name is Thich Nhat Hanh, right? I can pass to you. I actually have the book.
Oh, cool. I'll get a photo of it.
Because it's a book. It's an easy book that I bring along, and I'll read one chapter either in the car or something. I found it's giving me a lot of peace of mind, right?
Very real,
very real,
relatable.
Yeah, relatable. Doesn't take much effort, right? That's a book that I'm reading now. Yeah,
got it. Yeah, we'll get it in the show notes. So Jeremy, thank you.
Thank you so much for coming.
Fun. I know we covered a lot of ground, but
it's been fun. Yeah.
We enjoyed it. Thanks for your time.
Thank you so much.